Okay, we'll be tracking shares of Capital Land today when the market kicks off in Singapore in just about 40 minutes' time. Southeast Asia's largest property developer reporting a 45% drop in its fourth quarter results, and that's due to a one-off divestment loss. Profits coming in at 143 million Singaporean dollars, below expectations. Revenue easing over 2%, weighed down by a sharp drop when it comes to contributions from the Singapore property sector. So the market in the city-state has been slowing since the middle of last year, following cooling measures instituted by local authorities. Now let's talk more about property in Singapore, Hong Kong, and across the rest of the region. Joining us live from Hong Kong, we have Peter Churchouse, author and publisher of Asia Hard Assets, and also, of course, with us is our guest host for the hour, Richard Jerram of the Bank of Singapore. Peter, let's start with you, because we have this decline for Capital Land, the Capital Land's numbers, and owing some of it to slower sales of Singaporean residential projects. What do you think? Do prices come down? At least some are hoping prices will come down.
Well, I think it's fairly clear over the last couple of years that the Singapore and Hong Kong, the lion cities of Asia, if you like, were the first and experienced the biggest impact in the hard asset markets, particularly real estate, from Mr. Bernanke's financial excess. And we saw both of these markets really pushing into what was feared to be bubble territory. So we've seen significant policy impacts from both Singapore government and the Hong Kong government aimed to cool these property markets, and they're actually starting to work. So that I think is a significant factor in both of these markets right now.
Well, as you said, Peter, you know, everybody wants to know about property prices, whether you're in the markets or you're waiting on the sidelines, and everyone's an expert. So why don't you tell me, from your perspective, do prices drop in Singapore, and by how much?
Well, we've seen property transactions pretty much collapse in Hong Kong, and they're down about 51% in 2013 in Singapore as well. So you've seen these policy measures have had a big impact on transactions volumes, but not really much on prices. Singapore is still pretty much flat year on year. We're starting to see, I think, a little bit of negative pricing coming in now. Certainly in Hong Kong, prices are down about 5% year on year, but really not a big collapse. So I think the prospect as we look forward into 2014 is that we're going to be flat to down on both of these markets, and possibly even more so in Hong Kong than even in Singapore.
So, Peter, do you think these macroprudential measures work in a symmetrical fashion? Do you think if they get worried about the speed of decline, they'll simply ease up on the taxes and ease up on the access to lending, and they can stabilize it? Or do you think it's a real bubble and the whole thing will just keep on sliding for a few years?
No, this ain't a bubble in either market, really. When you see transactions falling the way they have, that is not telling you that we're in a bubble right now. These measures are working, no question about that. I can't see either government really easing up on these measures in the short term until we start to see a significant decline in prices, or if we start to see interest rates pick up. And in that case, interest rates will do the work of the government policies anyway. On top of that, in both of these markets, you've got significant increases in supply coming on stream over the next couple of years. That supply is probably going to come online just as interest rates start rising. So you're going to have a double whammy effect of supply plus interest rates, which will have a negative impact. And it's that point when I think you'll start to see the government pulling back on these tightening measures that we've seen.
Okay, so it's over to you governments here. But I mean, you know, if the thumb screws are going to be in place for some time yet, for investors, I mean, you've been looking at property for I don't know how long, Peter, for as long as I've known you. How and where do you make money then?
Well, at the moment, we're starting to see a few little ideas coming through where people are a little, I don't say stressed, but people are starting to knock prices down a bit, and you're starting to find bargains or better value in some of these markets. For example, some of the developers are now cutting prices by 15 or 20% on new releases. That's going to keep pressure on the downside for prices in the secondary markets, and you're going to see that in both of these cities, Singapore and Hong Kong. So we're starting to see a few bargains coming through in the markets right now, where you can pick up things that at some sort of a discount from what you were seeing a year or so ago.
Well, that's what a lot of people are hoping. Hey, Peter, thank you so much for sharing your time today. Good to see you as always. You keep warm. Peter Churchouse of the Asia Hard Assets Report, and Richard will be joining us throughout the hour. Okay, we're going to go to break, Marty, but what's coming up next?
Well, India, for one thing, is officially